Good evening, all. It is Sunday night. Hope you had a great weekend. We are coming up on the last 2 weeks of the year. The last 2 weeks of the year are extremely significant, and here's why. I'm going to show you last year. This is what happened last year. We consolidated. That's a nice consolidation. Not a very nice drawing, but very nice consolidation. And look at the date. This is 12/28, 12/31. 102. So 102 is actually when the market took off. That's when the market went for a very nice trend. We were short across the board, so we made a ton of money on this move. Fast forward, here's what the market is doing right now. We're showing one bottom, a higher bottom, and a higher bottom. So we're going to connect them, and we're showing higher tops. We're going to connect those as well. What I think is going to happen, I think we're going to go, I think that the next wave, I think, is going to be a nice bull market, a nice bull run. And here's the reason why. Last Thursday, turns out that this guy was running a Ponzi scheme. This guy has a hedge fund, basically. He was paying their redemptions from his hedge fund with new contributions, to the tune of $50 billion. To put that in perspective, Enron was only $32 billion. What happens is when the market starts diving and people start redeeming more and more and more and more, eventually was not able to cover them with new contributions because people weren't contributing new money. Now, last year, hedge funds had between 35% and 50% reduction in contributions. Redemptions, which is absolutely amazing. And of course, they had a serious reduction in contributions because cash out there shrunk. Now, whenever you have that kind of a redemption, you have a collapse because these hedge funds have to go to the stock market, cash in their portfolio in order to pay for those redemptions, which creates, of course, a big dive. A lot of these hedge funds are going to go out of business, and here's the reason why. Most hedge funds make money based on their performance. They make 2% on management fee, based on what kind of assets they have, and they make 20% of profits. Now, if for this year they are down 40% in profits, that means that even if they make 20% per year, it's going to take them 3 years before they get paid. Now, what's easier than that? What's easier is to just close your hedge fund, cash in everything, and then come back in with a new hedge fund, open up a new hedge fund and invest again, so you're starting from scratch, so you don't have to wait 3 years to make any money. That, in my opinion, is what's going on right now. And the reason why the market got beat up so bad is because hedge funds just had to come out of the market. And hedge funds have become quite sizable. For a while, we actually had more hedge funds than stocks. Just like we had more mutual funds than stocks before, and now we're going to start having more ETFs than stocks as well. In my opinion, pretty interesting. The problem is confidence, and the money is going away from the hedge fund and going into treasury bills, for example. That's why treasury bills right now have a yield of 0. That means that people are paying way above their price in order to get them, and that's why they have no yield. People are basically parking their money in cash, in safe cash. They're trying to find the safest place to park cash. Very interesting, because all that money can come back into the market in one big shot. What would happen if they all came back into the market in one shot? It would look like this, and that's what I'm looking at right now. Our whole goal right now, our trading strategy, is to find stocks that got really, really beat up, forming a bottom, and have plenty of upside potential. The best stocks are going to have the least amount of noise for the maximum amount of volatility. That might be contradiction of terms, but noise is basically the size of the bars. So this is very little noise and very nice smooth, for example. This is a lot of noise and not a whole lot of movement. You can see the difference. One of them is very easy to trade. You basically go short and you hold, you hold, you hold, you hold. Over here you have to go short, long, short, long, short, long, short, long, and it's painful. So that's my strategy for the next month or so, is I'm going to find all these stocks make sure that you sign up for our newsletter because we are pointing out all these specific opportunities that are going to go up. The reason why I'm saying is because there's a lot of stocks out there that got really, really beat up, and just a small bounce, even halfway bounce, or even a third of the way bounce, could mean between 30 and 40% profit, and that's what I'm looking at right now. I don't have any new picks for you for this week, but for the next couple of weeks, that's what I'll be looking at. I'll be looking at those stocks on a weekly basis that will be at the bottom. We'll be able to enjoy this move up. If you want more stock picks, if you want additional stock picks on a daily basis, you need to sign up for our newsletter. Anyway, have a great week. Watch for more news about the hedge funds. I think that what we have to look for right now is confidence. We need to wait for the next administration to come in, instill confidence, and then you'll start seeing the stock market coming back up. And you have to be ready for that. Don't miss the boat. Don't stay on the sidelines when all the cash comes back in. Have a great night. Have a great week. Talk to you.